Hello everybody, welcome to the Swing Trading Stock Market Outlook for the week of February 13th. Not a lot of changes. Last week we did have a bit of selling in the indexes, but nothing changed in the overall outlook in terms of what I want to do. Each week I go over the market health in terms of how the indices are performing, market health indicators, recent watch list and trade performance, and which sectors are performing well. That's basically the first step in my overall swing trading process, which is looking at market conditions first. Then if those are good, then I look at the individual stocks and looking for trade setups within those. So this week, market conditions are still good. I will continue to be adding more long positions if conditions stay favorable and I see setups I like. Overall, seeing some good price action in the trades that I've actually been taking, so that's positive. I did have a couple stop outs last week, but overall the price action I'm seeing is pretty good. The trades I have are still working, and stop outs are always going to happen even in good market conditions. So as long as overall you're seeing better results from the trades that are working than the ones that get stopped out, that's all we can ask for. These are the stocks that I'm watching. We have a best swing trading stocks list, which is just high momentum stocks, and then the watch list is the one where I actually look for the specific patterns that I'm trading, and I write those down and then I watch those throughout the week. That gets updated. There may still be some on there that are of interest, and come Monday or Tuesday I will update that list. In terms of how the indices are performing, overall, I like what I'm seeing. We're in short-term uptrends and starting to build into potentially some longer-term uptrends. So short-term uptrends are just this, where we're seeing higher swing highs, higher swing lows, basically throughout this year. And the NYSE composite, which is our broadest measure of stocks in the sense that it's all the stocks listed on the NYSE, so a lot of different industries, different size companies, and yeah, just a great measure of what the kind of average stock is doing. And you can see it's moved above its August highs that were back here. We've moved above them. Some of the other indexes are hanging out still below those levels, but that's really good that one of our broadest measures is starting to make major higher highs. We still have a long way to go to get to all-time highs, but you got to start somewhere, and we have been building to the upside for quite a while now, and that's good to see. And again, I don't make predictions about where the market's going. I just look at what conditions are right now. Do I want to be trading? Are these good conditions? Yes, they are, so that's why I'm buying. So we're in a short-term uptrend, and as long as that persists, then I'll continue to add trades in individual stocks. TSX, the Canadian index, also doing quite well. You can see we've had higher highs, so starting to build kind of a more longer term uptrend. These are just some ones of interest. Let's start with gold over here. Gold had sold off, and it had been pretty strong this year and late last year, this really strong rally. And then I was wondering why I wasn't seeing many gold stocks on my watch list. There were a few, but not many setups, and this could be the reason is that if you create a ratio of gold stocks versus gold, this is basically going to compare their performance in one chart, and you can do this on TradingView, just GDX/GLD. GDX is the gold miners ETF, so basically gold stocks, and GLD is the gold ETF. And you can create ratios between anything you want. If you wanted to compare Apple to Google, you could put Apple/Google and create a ratio and see which one's performing better. So a handy little tool. The thing I noticed here is we had this massive surge throughout 2023 in gold. Yes, we had an uptick in the gold stocks, but it barely was able to get above these prior highs here. So we can just see GDX was basically underperforming or not performing as well as what gold would indicate. You can see this was very strong, higher highs, higher lows in gold, and we weren't seeing that in the actual gold stocks. And it doesn't really matter. It's just, we basically weren't seeing the strength in the stocks that we would expect from what gold was doing. and that's one of the reasons there weren't a lot of gold stocks on my watch list. Crude oil just on here to fill in a space basically. Overall downtrend, it's starting to level off here into a range, but it's definitely not uptrending. Energy was strong this week. We'll talk about that in the sectors, but oil still overall pretty weak. Let's look at the market health indicators. So this is one segment of what I look at, just how's the price action doing, how's kind of the average stock doing. This digs a little bit deeper into how individual stocks are doing and how the S&P is doing. And we can go through each of these indicators. So price action was pretty good, as we talked about. This is how many stocks are above their 50-day moving average. It's basically a very crude measure of how many stocks are in short-term uptrends. If we're swing trading and buying stocks, ideally we want those uptrends because it's going to make it a lot easier to make money. If everything's falling and dropping, then you're picking a needle in a haystack of what's going to go up. When everything's going up, it's more like shooting fish in a barrel, and that's what we prefer. So we have about 65% of S&P 500 stocks are above their 50-day, and 69%, it's a little bit cut off, 69% of all U.S. stocks are above their 50-day moving average. So lots of stocks in uptrends. Basically, most stocks, well over half, are moving up, and that's going to make it easier to make money on the long side. Once we start dropping below 50, you're in periods like this where most stocks are dropping, where you can see below the 50 line over here as well. Volume, not that important to me at the moment. This is the percentage movement of the S&P 500 per day, and when you have big drops, that's usually a warning sign. When you're getting these big drops, like the first time they occur, a 2% drop is usually a warning sign for me to stay away. I'm not going to end up missing much. It might go up a little bit, but it's choppy or something, or it keeps dropping. So it's just a sign that says, hey, back off. There's a lot of sellers in the market. And you can see we have not had a negative 2% down day since December 15th. So we're going on, like 8 weeks, 2 months since the last kind of big intraday drop, which said, hey, things are scary. There's lots of sellers out there. And during a bull market, this is still, you can see we're still having some like pretty big values, like 1.5% drops, will rally 1.5%. Once we get into a strong bull market, this will really flatten out around the zero line. And that's really a strong sign of a bull market, is when that's happening, because you'll move up 0.2%, you'll drop 0.2%. You know, the moves are a lot smaller because everyone's kind of complacent, they're happy. We don't have any of these crazy moves and crazy volatility. So this is just, we look at this as a sign of, is this uptrending behavior, is it downtrending behavior? I'd say we're in like more of a transition right now. We were very volatile. This is downtrending behavior. And now we're kind of in the maybe turning point. And once this really starts to level off, that's when we'll kind of know for sure, like, yeah, we're in a long-term uptrend. Divergence, this has already happened, so I can delete that. But overall, we're just seeing the NYSE advanced decline line in a nice overall uptrend at the moment throughout this year. That's nice to see. Advanced decline line is just advancing stocks versus declining stocks per day, and it's a cumulative ratio, or a cumulative number, which, just basically shows our stocks advancing more or declining more per day. So this nice uptrend basically confirms what we've been seeing in the S&P 500. So all of these are thumbs up. This one, not important to us at the moment. We haven't had any important values as of late. What it is, though, is how much volume there was to the upside versus total volume. So when we get up to like at level 90 here, I've marked off some lines here. These are important levels. When we get up to 90, that means 90% of the volume that occurred that day was in stocks that moved to the upside that day. So a very bullish sign that there was a huge amount of all the volume basically that happened that day was in stocks that moved to the upside. We can have the opposite, where we have 10% of the volume, or 10% of the volume that occurred that day was in stocks that moved higher. That's a very low ratio of buying, so that's usually a warning sign. And you can see we're just kind of fluctuating in between the 90 and 10, so no important values. This one was actually just at the end of January was where was it here? January 31st. So my values are pulled off TradingView. TradingView doesn't always have the most accurate data, so it actually looks a little bit like it was below 90, but this was actually a 90% upside day when we calculate the real data pulled from somewhere like Wall Street Journal. The ultimate indicator, how are the setups that you are taking performing? This tells you personally whether you can be hitting the gas or you have to pump the brakes. And the stocks I've been trading for the most part have been making money. Yes, I had some stop outs last week, and I think one the week before. So I think 2 total, and that's fine. Stop outs happen, but as long as even one winning trade erases those 2 losses. We've had a number of trades hitting targets over the last several weeks, and the current trades that I'm in are still performing well. They're not close to their stop losses. So that tells me, hey, things are good. I don't have to back off at the moment. Market conditions are good. The trades are working. Keep doing what you're doing. Sectors on the move. I didn't change anything in here. Pretty much everything sold off last week except for energy, so a little bit tougher week. But overall, you can see these ones that I've mentioned: consumer cyclicals, communication services, technology, real estate, financials are both in the kind of top sectors over the last month and the top sectors over the last 3 months. So these seem to be the areas where most of the bigger upside moves are occurring. Do you have to use this? Not at all. I run my scan list. If I have time, I go through the whole thing. This would be more if you're a little crunched for time, or maybe you really want to zero in on a few sectors. This is just a way to kind of cut down your time. You set up your scan, and then you just add an extra criteria that says, only show me stocks that are in these sectors. And that might cut your scan list down to, from 150 down to 80 or something. So it's just might make your scan list a little bit smaller. I don't necessarily do that very often because if stocks are really weak and a sector is really weak, then those stocks likely aren't going to show up in your scan anyway. So it might thin it down a little bit, but probably not a whole lot. So I don't usually focus on this too much, but it may give me a little more confidence or a little bit of idea where to focus some of my trades. If you're given a choice between something that's really weak, let's say like healthcare has been a little bit weaker recently. It held up okay last week, but healthcare has kind of been dropping off a little bit. So if you have the choice between you have a really great setup in a healthcare stock and you have a really great setup in a technology stock, technology's been little stronger, maybe you take that one over the healthcare. Again, taking into account all the things that you see on the chart and based on the strategy. What I'm doing right now, I'll be adding positions this week, and for swing trades, if I see setups I like, I don't recall adding any positions last week, so I just had from what I had the week before, and I didn't see anything I super loved, and then we started dropping away from potential entry points or the triggers that get us into the trade. So this week I'll be looking to potentially add some more trades if I see some setups I like on the watch list. And of course, always day trading. You can check out how I day trade in the price action stock day trading course or the Euro USD day trading course. That's your outlook for this week. Happy trading out there.